Hi, this is Paul Carlson, CPA with AE Velocity. This video is going to look at the difference between using accrual and cash basis accounting rules for looking at a firm's income statement. We have a couple examples. We're going to talk through the differences. So the first income statement is run on accrual rules. Under those rules, revenue is reported as time is entered into the system or as work is completed. So in this simple example, we have $400,000 worth of revenue every month. Utilization is consistent, so we just have a steady revenue stream. We're going to ignore expenses and subcontractors. And for wages and overhead, those amounts are also flat for each month. Under accrual, for most firms, overhead is payroll and rent. And there's not much monthly variance once you use accruals and prepays to even out professional liability insurance and those other big annual bills. So in this example, we have consistent revenue, consistent net income, and if a month had an additional $20,000 of expenses and net income dropped, we could easily analyze and understand that net income decreased because bills increased. Now notice we have $4.8 million in revenue and we have $900,000 worth of net income. This is what happens when firms use cash basis reporting. That revenue is reported as cash is paid from clients. So here we have the same $4.8 million in revenue that we saw on the prior slide. Just that in this case, everyone went on vacation, everyone was still on vacation in January, so the firm received very few payments, received additional payments in February that we should have gotten in January. And then here, payments slowed down in September and October, and all that cash was collected in November and December. To keep the example simple, we left wages and overhead flat, but let's look at these net income numbers. That if we were going to look at these net income numbers just based on cash, that January we're thinking we're in trouble because we lost money. And then February we're celebrating because we have this great big net income month. And then we get down to August, September, October where those payments started to slow down. That we have losses for 3 months in a row, but then followed up with some huge net profits for November and December. That when we start seeing these types of numbers, management gets very frustrated and everyone really starts to wonder what's broke with the firm. And people really try to start managing problems that don't exist within the firm. That these losses are purely a function of clients paying us on a different schedule. So maybe bills went out late, we have new clients, AR calls weren't made. That is just a collections issue, and all that we're seeing within this net income number is a representation of collections, that any changes in net income or other functional changes within the firm will be swamped by the collections differences. That one of the first changes we do when we start working with a new A&E firm is we start to look at accrual basis revenue and accrual basis net income every month. And we try to get away from cash really quickly because you just can't tell a good story from the cash basis net income statement. So the key kickback is everyone wants to know, well, if we run financials on accrual, what happens to our income taxes? So what happens is we run the financials on an accrual basis. Income taxes are still filed on a cash basis. The financial statements are given to the tax professional and they will convert the accrual financial statements into a cash basis tax return. Sophisticated tax professionals do this all the time. It's standard practice with A&E firms. There's actually sections of the S Corp and Corp tax return for converting accrual financials into cash basis tax return. Or we could also do the conversions each month if it's that important to know the cash basis return. Do be careful that a lot of systems claim that you can click a box and get cash net income versus accrual net income. Usually there's issues with all of those. Examples are within QuickBooks Online, that if you accrual, we're going to mark that annual payment for liability insurance as a prepaid and release it over the year. When you click between accrual and cash basis, that prepayment still stays, so it doesn't completely convert. And Azure also has some issues with getting a perfect cash basis income statement, that we typically just run financials on pure accrual, and I'll rely on the tax professional to do the conversion on their side, or we will actually do that conversion within a spreadsheet because the accounting software isn't as precise as we would like to see. And with that, we had a quick description of why we want our income statement to be dull and boring and consistent, which is what we typically get under accrual. And we really don't like the wild rides that you see on cash that make us think we have problems that we don't. And with that, if you have any questions on A&E accounting for your firm, please give us a shout at AE Velocity. Thanks. Bye-bye.